Hello, Cliff Stanwick, Stanwick Real Estate, and I wanted to share that I have mortgage calculators at stanwickre.com. Um, I think with the interest rates essentially doubling in the last year, it's important that people revisit using our mortgage calculators what the cost of um, a loan is going to be. They're definitely a lot higher, and if you're selling a house, it's also going to show you that essentially for every 1% the rates go up, a buyer loses 10% of buyers' buying power. So if they could afford $1 million house last year, now they're down to 700,000. If they could afford a $700,000 house, they're now down to 500,000. So interest rates are definitely impacting um, people's ability to buy, and we hear a lot of talk about affordability, but I think it's really a good exercise to go through and use these mortgage calculators, because if you're buying a house, it's definitely going to tell you what your budget is and what the payment is. If you're selling a house, you're going to see what the impact is because the rates are a lot higher. I mean, they were literally 3% January last year. Now they're 6%. And if you haven't been following the stock market or the Fed, it looks like none of this stuff's going to change. So, as usual, just want to, share the disclaimer that we have. It's just these are my opinions, and it's for informational purposes only. If there's something else that, if there's more detail or more information, I'd be more than happy to, reach out and message me on Facebook or send a message on stanwickre.com, and we'll go back and forth, and figure out exactly, what your questions are, right? So with that being said, let's hop in and go out to the website and share these calculators. So this is the website, stanwickre.com, and up in the menu under the buy, there is a way where you can look at the listings, and there's mortgage calculators, and there's affordability calculators. So a lot of times the easiest way to start the process if you're a buyer is to look at what is known as these affordability calculators. It's essentially, you look at your annual income, you look at your down payment. Most people are, if they're using an FHA loan, it's probably around 3%. But most people are putting down 5, 10, or 20. So if you had, let's say you had $100,000 income, and this can be both of you, whatever. Say you had down payment of $20,000. Say you have other monthly costs of, car payments and whatnot, credit cards, debts of $1,000 a month. And now this is where the interest rates are at. They're at 6%. If you hit the calculate, it's saying you can afford a house of $335,000. Well, I've got to fix the down payment here. I had a little mistake here. So 20,000, recalculate. You're up to 353,941. As you know, the median price in Roseville, California, is about $700,000. So obviously, that's the impact of it. If we had changed the interest rates to where they were a year ago, which is around 3.25 or 3.23 is probably about right, you would have been up at $480,000. So obviously, you can see how this is really hitting. In order for you to get up to the, to afford a home up to 700,000, you're probably going to need significantly more income. So let's see, at 150, you're at 826. So you're going to need about 130,000 would be my guess. Yeah, about $135,000, and you can afford a house, probably the median price of Roseville, and your payment's going to be about $3,050. But wait a minute, that's not really all, right? So there's going to be property tax, which depending on your budget is going to be 1% of the 722. So let's say we drop your budget down to 700,000, and then we can just say, property tax is probably going to be a little over 1%, say $7,500. And let's say your home insurance is going to run, or the property tax rate's going to be around 1.2. Home insurance is going to be about $1,000 a year. Let's just say you're not going to find a condo or whatever. Again, right, the property tax puts a big impact, puts you down to 571, right? So again, that's just the affordability calculator. And again, you can then go over and look at the mortgage calculator and say, well, I really want to try to buy, more house. Well, that's probably not going to happen, but let's just say we put 700,000 in here, average price of the Roseville house. Say you're able to maybe get a little bit bigger. You can put 10% down. Somehow you're going to find the funds, and you're going to calculate, and your payment's going to be about $37.73 a month. So if we look at the last number, probably kind of close there, but again, we have to figure in the property tax, which is going to be roughly probably 1.2%. There's always some add-ons, and we're going to have, again, probably about $1,000 for the home insurance, and now your payment's about $45.56 a month, right, for a $700,000 house, and that's with a 10% down payment, right? So again, the interesting thing also to look at is your mortgage payments over 30 years. You're basically going to buy your house twice, right? So that's another thing, that is being impacted by interest rates, right? Now, if the interest rates were under 6 or they went back to 5, your payment's going to go down quite a bit. It's going to go down to $41.65. If it can go down to 4, it's going to go down to $37.91. So you're seeing how, interest rates are really impacting things. And if the rates go higher, like say they go to 6.5, your payment's at $47.65. If they go to 7, which I think's possible, you're up to $5,000. So interest rates are really impacting things, but I wanted to share that there are some really good tools at stanwickre.com, and that we can you can use them to basically calculate what the payments are going to be. And I think it's kind of a thing you need to watch and what you need to be looking at. If you have any questions related to buying or selling a home, please reach out to me either on my Facebook page or reach out on the website, stanwickre.com. Would love to help you, and I wish you, again, a prosperous 2023. Thank you very much.